Hello and welcome to Ask for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There is a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we're going to be diving into. Wall Street seems to be shrugging off threats of that government shutdown, which look inevitable at this hour. At the end of Tuesday's session, all major indices did end the day higher. Is Generation X ready to retire on schedule? We're exploring what that might look like for the forgotten generation. And precious metals may be the way to go as gold has been shining. We're looking into what's behind that trend and how long gold will continue to rise. Well, seniors are bracing for another modest cost of living increase in their Social Security benefits next year, but tariffs could make that boost feel even smaller. And if there's a government shutdown that delays September CPI data, the Social Security Administration might not finalize the cost of living adjustment known as COLA until the Bureau of Labor Statistics releases the numbers. Joining me now to talk about all this, we've got Yahoo Finance senior columnist Kerry Hannon. Kerry, great to see you, first of all, on set. Walk us through what we need to know here.
Hey, Josh. Thanks. Great to be here. Here's the issue. With the cost of living increase, the adjustment each year, what happens is the government looks at the inflation numbers from July, from August, and September. And they average those together, and boom, that's what your increase is going to be for seniors starting in January. So this year, it was 2.5%, which is about roughly $50 per paycheck. This year, it's been looking like the estimates are around 2.7%. But hey, wait, we don't have the numbers in yet from September, and they are due in on October 15th. Mm-hmm. Now, if the government shutdown stops them from gathering this information for our CPI numbers, they're not going to be able to come up with that accurate number for what the cost of living adjustment or COLA will be for seniors in their checks starting in January. So it's not a big panic right now, but the fact is, what happens, Josh, is it creates uncertainty. Mm-hmm. And there is so much uncertainty about Social Security right now anyway. But for people to have some grip on, they're already concerned that it's not going to be big enough as it is. As you mentioned, the tariffs. I mean, a lot of the numbers that go into the inflation numbers we see don't reflect the sorts of things that seniors actually spend on. And so I think that there are things to be considered, but mostly what we're worried about with the shutdown right now is when are they going to have the appropriate number?
With this potential government shutdown, you bring to this a unique perspective and lens to it. What would you say people have to know about that?
Yeah, I think, be patient. It's not necessarily that you're not going to get the number. There is concern that how accurate will it be now if they haven't been gathering information, if it shuts down. But the chances are this has happened in the past. So, in 2013, the government shut down for 2 weeks in October. And so what happened is the numbers just weren't released. Instead of finding out what the COLA was going to be for that next year on October 15th, it happened October 30th. So it might just be a delay in getting the number. But it's just to say that it is one other little piece of the puzzle that causes confusion.
Finally, Kerry, big day for you. Your new book officially hits the shelves. Walk us through it. What are people going to learn?
So this is something I really want to talk about. Yes, Retirement Bites is my new book out today with Kerry Hannon, who's a former editor here at Yahoo Finance. And we're taking a look at Gen X and saying, hey, guess what? It's your time now to get started thinking about retirement. The oldest Gen Xer now will turn 60 or has turned 60 this year. The youngest is in their mid-40s. But this is a generation, Josh, that has often been overlooked. You've got the huge boomer generation, the millennials, and this is what they call the forgotten generation. But this is a cool group of people, right? It's the slackers, Pop-Tart kids, rode their bikes without helmets, lots of scrappy generation. But they started saving for retirement. They entered the job market right when 401ks were just starting. So nobody knew what the heck these things were. It's do-it-yourself retirement planning. There are very few choices to invest in. And in fact nobody told us what to do, or you could hardly put any money into it. And frankly, I cashed out after 5 years because nobody told me I shouldn't. And this generation is woefully unprepared. Many of them are for retirement. It's come up quickly, but doesn't mean they have to give up. It tends to be a generation that's kind of gloomy. They all feel that they're woefully unprepared, even when they aren't. So I say, kick it up a notch. You've got this. It just takes focus. And now is the time. The runway is still there, but it's time to start paying attention.
Pop-Tarts and bikes without helmets. It's a Josh Lipton childhood in one sentence, Kerry. Great to see you on set, and congrats on the book.
Fun to be here. Thank you so much.
Stick around. Much more Ask for a Trend still to come. Both the Nasdaq and the S&P 500 are notching their best third quarter since 2020. Yahoo Finance's Jared Blikre joining us now with the trading day takeaways. Jared.
Thank you, Josh. We got to break down some of the records and some of the interesting things we saw over this quarter. I say records because the Dow Industrials notched a record high on the very last trading day of the quarter. Pretty impressive there. And this was 64 days, 5.22%, not bad. For the month of September alone, that's almost 2%. Nothing for the history books, but when you consider that September historically has been that lackluster month, if not negative, then that's actually surprisingly good. Here is the sector action for the month. Tech and communication services, the best off here, but let's do the core, because I was just looking at the monthlies after the bell. Tech up 11%, consumer discretionary close behind at 10%, and communication services at 9%. You put all those three together, what are they? They make up the mega cap sectors, and so that's what we saw a lot of. But not to be left out, the Russell 2000 came into play too. We saw a bunch of outperformance on certain days, not always, and we also got that record high not too long ago. And then if we take a look at our leaders over the last quarter, some interesting stuff pops up. MJ, it's very volatile. That's cannabis, but that basically doubled its price over the quarter. Then you have solar, then you have ARK Invest, so disruption really doing well. KWeb is China. Don't count out China, and it's very uncorrelated to the US. Then you have biotech, then the Mag 7, chip stocks, and I think we can talk a little bit more about chip stock in a second, but home builders, small caps, retail, the list goes on. So there's a lot happening in the bullish realm in this quarter.
What have been some of the leaders you would call in this three-year bull market?
I got to look at what happened today. Chips hitting records. So not only did NVIDIA hit a record, but the SOX, the Philadelphia Chip Index, that also hit a record. So let's go to the semis and get the quarterly totals here. You can see NVIDIA there up 18.1% in Q3. Western Digital, that was up almost 90%, then Lumentum, then Intel, then Lam Research, then Micron, up 35%. And I want to focus on Micron for a second because I just had the chance to sit down with Corey Johnson in Stocks in Translation. That podcast dropped today, so that's available. And we were talking about the comeback story, how they've turned things around. Let's take a listen.
Nobody knows more about boom and bust than Micron. And yet you see a company that's spending inordinate amounts of CapEx right now when we're at what some people are calling a peak in the cycle. And I just don't see it. What the feedback we get from companies is that they are sold out. The feedback we get is that all of the stuff they are selling, unlike the fiber of 1999, all of the chips they are selling are getting used. They cannot possibly make more and sell more. And so what I see is not a buildup in inventory. I see a massive consumption.
So if they're a kind of a bellwether, maybe even a poster child, this is a company that used to play it safe, do some very predictable things. Now they're leaning into AI, and according to Corey, they can't get enough of their products made for the demand. So I think that's a really interesting little tidbit right there.
Want to talk about commodities? Maybe
yeah, let's do that because metals soaring. Oh, we talk about this quite a bit, and that's because metals have been soaring almost every day. Here is our commodities heat map over the quarter. In the upper left there, you're going to find silver up 23%. Let me just adjust this down to the monthly so you can see platinum and palladium. Those have really roared back. So platinum up 17%, PA equals F is palladium. Then you have silver right neck and neck with palladium. And then copper. We don't really talk about, well, I haven't talked about copper a lot, but let's just show over the last month, 8.6%. That is a huge deal because we're not just talking about precious metals here. We're talking about the metals necessary to build stuff. And for that matter, that includes silver as well. And silver is a big part of the AI trade. So you can see up 13% there. But for the year, up now 60%. It seems only a few days ago it was 50 because that was the case. I think we can end there on metals, but actually we got to show gold up 46% year to date, 38.86.
How about crypto quickly, your take?
Let's do that because crypto had kind of a lackluster quarter. Let's see, Q3. There we go. Bitcoin up 8%. I think investors will take that, but it's basically been going sideways. And you'll see we got some big numbers here by some of the smaller guys. When we dial that down to September, that goes down just a little bit. But let's just pull up Bitcoin one more time so I can establish these trading ranges. By the way, Ethereum negative for the month, but Bitcoin's still in this trading range.
About 2.5 months here.
Yeah, the last time we talked about it was Friday. I said I wanted to see it dip down maybe to 106, 107, and then come roaring back. Didn't quite get that low, but it did come roaring back by Monday. And so now we're still in this trading range. So until we get to the top in the low 120s, doesn't mean much.
All right, thank you, buddy.
You bet.
Appreciate it. Well, the impact on American lives from a government shutdown could be far-reaching. One area of concern, air travel. My colleague Julie Hyman recently spoke with Breeze Airways CEO about what a shutdown could mean for the airline and customers.
I think it's going to be business as usual. Good thing it's not a really peak travel time of year. As we kind of leave September into October, things start picking up. But I think we'll be fine. Yeah, it's really a TSA checkpoint issue, and our checkpoints, we fly to lower capacity airports. So, and usually it lasts a week or no longer. So we're hoping it passes quickly.
So let's talk about the news that you guys just came out with, that you're going to be beginning these international routes here. January 10th, you're going to go to Cancun, and so sort of opening up these Caribbean routes. What led you to that decision, and were you seeing that customers wanted this kind of service?
Absolutely. In our business, we have peak travel days, we have peak travel times of the year, peak travel times of the month, and usually it's Thursday, Friday, Sunday, Monday are our best days, especially with the extended work week where people take Fridays off or Mondays off. Saturdays generally are a little bit weaker, and we don't fly as much on Saturdays, but it's a perfect day to go international. Excuse me, especially these destinations that we fly to. They have a lot of all-inclusive resorts. So somebody in Providence, Rhode Island in February can hop on one of our planes and fly down to Cancun and spend a week there and then come back. So it works great for our Saturday to Saturday service. So you see all of it's either a Wednesday, Saturday, or there's one that's Thursday, Sunday, but it's mainly Wednesday, Saturday. So it really helps the utilization of our fleet with some high dollar tickets sold on a Saturday.
David, just to broaden it out, what are you seeing in terms of demand right now? We talk a lot here about how folks who are in the market, for example, are holding up very well, but people on the lower income side of the spectrum, people who might be your customers, are not. Are you seeing that show up at all?
We're not. We're having a great September. Usually September's kind of synonymous with death in the airline industry. Our October fall bookings are great on through the fourth quarter and into the first. So, we're very hopeful. And, we have an offering that's so much different than everybody else. 85% of our routes have no nonstop competition. So it's not like we're fighting for the same people. And we stimulate maybe 8 times more than we still hardly anything. So it's more just stimulating traffic, getting people to go more often and for a really good fare, and where you can get somewhere in an hour and a half instead of 4 hours by connecting through a hub.
And David, just quickly here, how are you guys fitting into this environment now where on the low cost side you've seen a lot of consolidation and it's been a tough business?
Yeah, it's really tough. And it's interesting because the low-cost guys thought if they just got bigger and bigger and bigger airplanes, they could have lower and lower cost per seat. And then the other guys said, we'll get bigger and bigger and bigger. We'll take those incremental seats, and we'll use those seats to go against the ULCCs. And because the ULCCs were in bigger and bigger markets with their bigger and bigger airplanes, that put them on a collision course. So it made it really tough. Conversely, we have a smaller airplane, 137 seats, soon to have 16 first-class seats. We have 12 today, 45 extra legroom seats. And so we can fly in a bunch of markets that don't make sense for the ULCCs. So we're kind of out of that fray. Gotcha. But it's tough to watch, really.
Stick around. Much more Ask for a Trend still to come. Gold prices are on a tear. pushing to new highs as investors weigh government gridlock, a shifting Fed, and central bank demand. Joining us now is Blue Line Futures Chief Market Strategist Phil Schreibel. Phil, great to see you as always. Let's talk about this rally in gold, Phil. What is driving that rally, Phil? What are the key reasons as you see it?
Yeah, and it's been an incredible rally, and it's really, we're setting up for this fourth quarter. The momentum for gold's been truly remarkable. It was a 10% increase in September, a 45% increase year to date, and it's positioned here for one of the biggest annual gains since 1979. So if you look at over the past few quarters here, we've seen factors where we have declining growth, economic growth. We've got rising inflation. So it creates a clear stagflationary environment. And that back tested is one of the best economic environments for the gold market. We've also got a weakening US dollar and really anticipation that the Federal Reserve interest rate cuts could really kick into high gear. And that's where the foundation and the groundwork that puts where gold futures are today.
What are you seeing, I'm curious, Phil, in terms of ETF flows?
Yeah, that's been a big thing. That investor enthusiasm is really reflected with a 16% increase in gold ETF holdings this year. More individuals, more institutions recognize gold and cement it as a position of strength within their portfolios. So looking at it as a diversifier. You're seeing even, large financial institutions like Bank of America recommending that traditional 60-40 portfolios are broadened out and they have some exposure to gold. And it's been back tested, and it shows that adding different elements like oil, adding gold, adding miners, adding things like this to traditional portfolios tend to work as a diversifier, and it benefits in different economic environments.
All right, now take out the crystal ball, Phil. Tell me what you see ahead for gold. Analysts at Goldman, now they told their clients they expect 4,000 by mid-2026, Phil. They did outline an upside scenario, 5,000 by the end of next year, but what do you see?
So the reality is that, gold futures, they came up under $3,900. And if you look at the average true range, it's been moving $50 a day. This thing could hit 4,000 by the end of the week if it really wanted to, stringing together two normal days upward at the moment. If you want to play devil's advocate on it, and you want to look at what are the potential risks to the bull market, because that's what I would be focused on. When you have these incredible run-ups, you always want to kind of have one foot out the door. You look at, we've identified several key factors that investors should be aware of. Recently we've had better economic data, everything from second quarter GDP, consumer spending, personal income have all come out better. We do have this government shutdown, which has shifted the prospects of interest rate cuts. Now we're back at like a 96% chance they cut 25 basis points. But you look at the dollar index has been consolidating sideways. If we start to get a series of higher lows on that chart, we also get treasury yields. If they begin to rise along with improving economic data, you could see gold futures settle back. So I'd be looking at, hey, where are the key levels of support? And it's really 3750, 3660. So you want to monitor those in conjunction with, where gold prices are at, where we expect them to go, and look at the drivers.
Quickly, Phil, I only have about 30 seconds left, but we've been talking about the yellow metal. What do you see with silver?
Strong correlation to gold. The ETFs, they did cut the last 3 days. It was mostly profit taken as we run up and get closer to $50. Physical demand has really been lagging. Industrial demand hasn't been there. The mining supply and the growth, that's been really offline. So it's just been a lot of the ETF flows that have brought it to where it's at, and the conjunction and the correlation to the gold market.
Phil, always great to see and to have you on the show. Thank you, sir.
Thanks.
That's a wrap on today's Ask for a Trend. Be sure to come back tomorrow, 4:30 p.m. Eastern, for all of the latest market moving stories affecting your wallet.